Good day, hope you all are well. Hope you all are having a lovely day. MGR Forex Trading coming to you with a lovely breakdown on Euro USD, and we are definitely going to be having a look at how one could have caught London and New York session. So without further ado, let's get right into it. And I'm going to start off by cutting off a piece of the chart. I'm going to cut off just before London session so that I can obviously break down and show it to you in basically a live format on how you could have analyzed and tackled this pair based on price action and market structure. So first and foremost, what we are going to be doing is we have to frame the picture. We have to understand where or what is market structure, what exactly it is, and how we are going to use this to our advantage to generate the bias, generate our direction, and from there take it down to the lower time frames and obviously get a lovely entry to take our position. So yes, what do we see on the charts right now? What I see is a bearish market, or at least that's what I think I see, based upon lower highs and lower lows. We broke structure over here, made a lower low, pulled up, failed or struggled to actually make another lower low, and finally made a lower low over here. However, we have to look more carefully within this area. What do I mean by this? We have to break down our areas of support and break down our areas of resistance, so at least put them out on the chart so we at least know what we are seeing. So what I'm going to do is I'm going to obviously box out this area of support. What exactly do I see over here? I think I see a fake out. Why is that? Because this candle, it went into the area of support. The next candle broke below and the following candle broke right back above. This is a fake out. Now being on the 4-hourly time frame, since this is on the 4-hourly time frame, this is a very important aspect to take note of. This is our directional time frame, or one of the directional time frames that I use to trade forex and to trade indices, and that's the way that I obviously do it. I'm more of an intraday trader. I prefer using the daily to hourly time frames for my direction and 50 minutes for my entry. If you are swing, you can use the same analogy when trading. If you are a scalper, it's the same thing. It's obviously all just different time frames. So with that being the case, that's our area of support. What is our area of resistance? Now, you can box this out as well. And what you would see here is another fake out. Now keep in mind, what's very important when it comes down to our areas of concern is the market structure upon the tap into that area of concern. So if we tap this area of resistance, but we are bullish market, we will go right through that area of resistance. Unless we change market structure upon the tap into our area of concern to anticipate a respect, that's perfectly fine. But we will go right through that area if market structure remains bullish on all time frames from 4-hourly down to 15 for this example, and that's just how it will be. That's what's going to happen. Follow your market structure, move with the trend in layman's terms, and yeah. So 4-hourly is bullish. Why? We had a fake out, and if you want to box this properly, this fake out is actually not tested, just obvious. This candle did not pull back and test that area. You can see over there, I did not test it. So what I am anticipating is a potential retracement into that region and along from there. Up and down the 2-hourly time frame. So 4, 2, and 1 is my directional time frames. I use this for forex and I use this for indices as well. And 2-hourly is bullish. 4-hourly, 2-hourly is bullish, and that's fantastic. That's going in accordance with what I am looking for. All that I need now is a correction into my area of concern and a long opportunity from there. That's what I am looking for. Up onto my hourly time frame, we are bullish, but more choppy. You're seeing more bull and bear candles. I wouldn't want to be trading around something like this. I want to see clear direction of where I want price to move. So let's go into our 30-minute time frame. 30-minute, 15-minute time frames are our lower time frames. That's what we use to fuel our higher time direction and to get our entry to move in accordance with our higher time frame direction. That's fantastic. We are bullish here as well. However, I am seeing if we can respect this resistance, or we can definitely see a correction down at our area and a long opportunity from there. Up it down to the 15. 15 is telling me the same story as 30-minute time frame. I'm not too concerned about these interruption candles. I know market structure is we can definitely see a potential correction coming down into our area and along from there. Coming down quite nicely. Fast forwarding. What I'm going to do now is I can see a clear lower high. So what I will be doing is drawing a descending trend line. And it's actually somewhat of a flag as well if you're going to copy and clone this trend line. I'm not too concerned about that. Why? Because I'm mainly waiting for my entry based upon a break and a retest of this descending trend line on the highs. I'm not too concerned about the lows. I know if you wait for a change of market structure within the flag to change to bullish, you can definitely anticipate that, but I'll just be waiting for a break and a retest. I'll be more conservative upon London, and that's perfectly fine. So I'm going to stand on the 15 now. I definitely want to see how it's going to play out. And off we go. We smacked our area of concern. We had a nice weak rejection. However, with a long wick turn to the downside and a bearish close, you can expect this long wick to be filled. And there we go, filling it. All we have to do now is wait for us to... We're seeing some lovely rejection here. All we have to do now is wait for price to break above this descending trend line, retest it, and that's going to be our entry for our long. I don't like to hold my trades for too long, even though they are moving in accordance with the higher time frame. I will catch my 10% and I'll be out. That's the way I trade. And obviously you can play around with your lot sizes to make sure it obviously moves quite nicely. I will have a 30 pip reward for a 15 pip gain. Or if you want to look at it as 300 pips, 150 pip risk, 300 pip reward. Perfectly fine. 15 or 30 pips. Either way you look at it, same thing. Just play around with your lot sizes. Make sure that you're applying the correct money management, the correct risk management on this position. You don't want to lose a trade and then blow your account. I don't find that to be quite nice, to be honest. That's going to hit you quite psychologically. And trading is definitely a very big mind game. You definitely have to be in the right state of mind to be taking these positions. Otherwise, you won't see yourself in these markets for a very long time. However, with that being the case, all I want now is a correction into our trend line and long from there. So nothing. You're not in this position, and now you are. You were about a pip away from there, but I'm sure you could have taken it. Nothing wrong with that. If you were really waiting, then you definitely got your entry over there. And yeah, that's fantastic. Now you're in this position, and all you do now is you hold it, and you run it either to stop loss or take profit. With the right money management, that should not be a problem. And off we go. Take profit, smash. That was London. You held this trade for around, you could say 3 hours. That's not too bad. For London session, it's quite nice. Being an intraday type of trader, an intraday setup, 3 hours is definitely not too bad. So obviously, that's London smashed. It's a TP as well. That's beautiful. What we will be doing over here is hopping now to the 4-hourly time frame. Why? We get our direction from 4 to 1. For me, that's what I do. If you're intraday, I would recommend it as well. And why am I doing this? I'm basically restarting my analysis simply because we have to now get our direction from a higher time frame. And since I'm trading a new session, I cannot take the higher time frame analysis I took from London session and try to apply that to New York. You cannot do that. You have to reanalyze, even though the market structure might be the same, you have to reanalyze because we might be tapping a high time frame region or a very strong area, and you might be thinking we're bullish, but upon tapping this region, low time frame change in market structure, maybe hourly change in market structure, and we respect it and we come all the way down. And that's obviously not going to be very, very nice. That's going to be a nice fat stop loss, and we definitely don't want that. So we're going to reanalyze and have a look at how exactly we're going to be going about this. And up in over here. So looking at the 4-hourly time frame, we are coming off that fake out we had on the during London session. We broke above, we retested upon here. We are coming off that, being bullish in market structure. Going on to 2-hourly, we are bullish as well. Going on to your 1-hourly, we are bullish as well. So in this scenario, perfectly fine since you are bullish in all market structures or higher time frame market structures. That's definitely very nice. That's a good thing to be seeing. You can be anticipating a potential correction for the next impulse up. Now, since we are at the higher high, a higher low can easily be anticipated. However, if every single market structure remains bullish, we are not going to pull back for a higher low. That's just the way the market moves. And especially with EUR USD being a very fast moving forex pair, if every single market structure is going to be bullish, we're going to be continuing making higher highs and not necessarily pulling back for a higher low. And you can definitely see that when it comes in terms of news and fundamental news events where prices spikes and you're thinking to yourself it has to pull back but it doesn't pull back. That can definitely happen with fast moving pairs. So going on to our 30-minute time frame, we are bullish as well over here. 50-minute, we are also bullish. For me, New York session begins at 3 p.m. For others around the world, whatever your time zone may be, you obviously have to do the necessary calculations to determine when it's in London, when it's in New York, and then you obviously get up, you analyze at least an hour before then, start taking your position or prepping for your potential position that you will be taking. Up until our 50-minute time frame, we know that our 4-1 30-minute time frame is also bullish. So we know that we can potentially expect a correction on the 15th. We are at the higher high, and it can be seen that there wasn't like very, very impulsive candles. It was quite clean. High high, pull back, high low, high high, pull back, high low. Apologies for that. Pull back, high low, high high. We can expect a pullback and the next higher high. Now, this is where things can get tricky, especially for the beginner trader if you do not understand your market structure and if you do not understand your top-down analysis correctly. It's easy to say, just make sure everything coincides with each other. Just make sure everything correlates with each other. It's all making sense. 4-hourly bullish, 2-hourly bullish, 1-hourly bullish, 30-minute bullish, look for buys. It's easy to say that. However, it can get more trickier on your entry time frame. So with that being the case, you just have to be patient and you have to take it as it comes. And you have to react to the market and not try to predict to a large extent of where the market is going to go. That is what you are doing, but you want to at least be more reactive to price because it's a market of probability. Anything can happen. So you definitely have to make sure that you have all your ducks in a row. You definitely have to be focused on what is occurring. So yeah, let us fast forward and get into this New York session. That was a nice information and made an eye. And you're probably thinking to yourself, what is going on over here? We're having so much. Do you think this is the information? Oh, maybe we can sell now. 2 down, 1 up information. Let us sell. And then price pushes up and you're like, oh no, this ain't happening now. That's why you definitely have to be patient. I prefer taking my position quite close into New York or quite close into my session. That previous London trade was done at like 10 o'clock. London's normally at 9, and like an hour afterwards. So you definitely have to wait for everything to align. Have all your confluences and take the position when everything comes together and you are quite confident in this one. Don't just take any trades left, right, and center. That's not how we do it. We analyze, we be patient, and we wait for our criteria to be met. And once it is, we, like a sniper, we pull that trigger and we go for it. So here we are, pulling down quite nicely. You're probably thinking to yourself, hey, you're coming down quite close to this structure here, the structural level, this area of support. What can potentially occur upon tapping into here? This is obviously an area where you want to be looking at. You don't want price to really like break far below, and then the 30-minute time frame might change market structure, and then you're thinking to yourself, now what do I do now? 4-1 bull, 30-15 bear. Be reactive and not predictive when it comes to your entry. And now we are breaking below and thinking to yourself, oh no, what's happening now? This is where you just be patient. You will know that your high time frame is bullish. You wait for your 15 minutes either to change into bullish for that long opportunity, or you have to reanalyze once again and just make sure everything is aligning perfectly. This can be a fake out, a break below and a break above. What happens after a fake out? We tend to retest the area that we faked out on, and that can be your potential region. What you can do is have your trade run back up into this area of resistance, because you don't know what might happen upon tapping this area of resistance. We can decide to respect it and come right back down to your entry. So when it comes to this, you are more or less, you could say you're scalping basically. Have your stop loss at least 150, or you're going to have to make your stop loss here 100 pips in order to at least run a 2-to-1. If you want to run a 1-to-1, that's perfectly fine. I like to have the odds in my favor. I like to take positions that at least have a 2-to-1 risk to reward. And that's definitely what I'll be doing here. Upon this retest, I'll be long, back up into the area of resistance, and after that I'll be closing. I'll adjust my lot size accordingly to make sure that upon this position I'm only risking at least 5% or less, and my gain will be in and around, you could say, 7 to 10%, depending on the risk. If you risk 5, you gain 10. If you risk 4, you gain 8. If you risk 3, you gain 6, for example. You can have more, but that's all up to you. That's the retest and the long. That's a take profit smash. And that was in half an hour. So that was quite a lovely position that we had over there. But okay. Hope you all took something away from that. That was quite a simple analysis, to be honest with you. Not every single day is as lovely as that, but fantastic one. Once again, hope you learned something from it. Please like and subscribe. If you have any questions, in the comment section. And keep well, keep safe. I'll catch you in the next one. Cheers.